and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. In this edition, we're going to turn the spotlight on IL&FS. Not to do a post-mortem on what went wrong, there's been enough speculation on that, but to try and put our heads together and draw up a blueprint for the way forward for IL&FS. I hope you noticed that I carefully avoided saying blueprint for revival of IL&FS, and there's a reason for this. Because for now, we really don't know whether IL&FS ought to be saved. Sure, we've seen a statement from Uday Kotak, chairman of the new board, that all steps will be taken to preserve the value of the IL&FS group. And while that might be good news for all those who got singed by IL&FS, my question to you is, what does the term all steps mean? Does it mean at all cost, or should steps be taken only after an informed cost-benefit analysis is done? Because remember, action is bound to entail some cost to taxpayers. So what are the do's and don'ts for the new board as it wrestles with a problem that seems to get more complex by the day? I have with me three experts: T.T. Rammohan, economics professor at IIM Ahmedabad; Meera Sanyal, former CEO, Royal Bank of Scotland in India; and Hemendra Hazari, the straight-talking independent banking analyst, all of whom have a deep understanding of the financial sector and, more importantly, are not overboard by the composition of the new board to help us draw up a plan of action. Welcome to the show, TTR, Meera and Hemendra. Ever since the government took charge by dismissing the board of IL&FS and replacing it with a hand-picked team, many have drawn comparisons with two earlier instances where the government had stepped in, the UTI bailout and Satyam Computers, though to my mind both are very different. US 64 was a government-owned, government assurance scheme. Satyam was a privately owned ITES company. In contrast, IL&FS is a privately owned financial sector conglomerate. So the implications of failure and following from that, the kind of remedy will necessarily be different. So let me start by asking each of you in turn whether you agree with me. Is IL&FS sui generis? If so, should we be very careful in distinguishing it from both UTI and Satyam? Let me start with you, TTR. We'll get into the details later, but for now I just want your view on whether IL&FS is different from US 64 and from Satyam, and if so, why?
Well, certainly I think IL&FS is a different case. In Satyam, it was a case of straightforward accounting fraud, and there was no systemic risk arising from the failure of Satyam. In the case of UTI, a certain high dividend was sought to be maintained through exposure to equities, and so when the equity market started declining, that strategy was completely undone. And of course, the failure of UTI would have had significant implications for the financial markets, although perhaps not so much for the banking system. In the case of IL&FS, I think there are important implications for banks as well as for the non-bank financial sector, and also the financial markets which are exposed to IL&FS because of their investment in commercial paper. So I think there are significant systemic implications arising from IL&FS. Now, of course, I've heard allegations of scam, fraud and so on, but I would say that those things have to be established by due process, and even if there were frauds, any frauds that happened in the case of IL&FS, I am not inclined to believe that can account for the aggregate problem that we are seeing today. The issue is far more fundamental, and it has to do with issues of liquidity and solvency.
Meera, would you agree with TTR?
Well, actually, Mythili, I think he's certainly right, but I think the issue with IL&FS is more fundamental. You see, we are all looking at IL&FS as a non-bank financial company, as an NBFC, but that's not what it is. It is actually a highly diversified build and operate infrastructure company. And what has happened is that we have treated it as an NBFC. So for example, you know, if you were to come to a lender and say, look, please finance a new venture which I'm doing, the lender would look at you as a highly respected journalist with a lot of experience in the financial services sector and would say, all right, we're willing to invest in your new venture. Now, supposing you took that money and gave it to your 21-year-old nephew who was dealing in cryptocurrency and bitcoins, and that money went awry. So the question is, what we are dealing with, you know, everyone thought they're investing in an apple, and in fact what they invested in was a 300-pound gorilla. And that is really the problem with IL&FS. Even today, we keep talking about an NBFC, we're talking about contagion risk to other NBFCs. This is a completely different animal. This is a diversified infrastructure conglomerate. And unless we start looking at it that way, we are not going to be able to resolve the problems that it currently faces.
Okay, Hemendra, Meera said it's not really an NBFC, but under RBI's norms, it is an NBFC. It's a core investment company classified as a kind of NBFC. So would you agree with Meera and TTR that we need to treat it differently for whatever reason from Satyam and UTI?
No, most definitely. In this particular case, the RBI has already classified it as systemically important. Now, what the classification means is that it is too big to fail, and therefore it has to be bailed out. Because if it is not bailed out, then the system is at risk, and that is the key differentiator between IL&FS and Satyam and UTI 64. A second part of it is that according to me, this company IL&FS has been insolvent based on its just accounting disclosure for the last 5 years. So it is not just a problem of liquidity for IL&FS, it is a case of insolvency, because according to me the accounts are very clear that it is an insolvent company. It has been insolvent for the last 5 years that we know. So therefore, a systemically important company is insolvent, and therefore it has to be resolved.
TTR, now that we all agree that IL&FS is different, can I ask you to explain for the benefit of our viewers, what is it about financial conglomerates that raises a stake to a very different level altogether? In technical terms, it becomes systemically important. Also, the term systemically important is normally used in the context of banks, but IL&FS is a non-deposit taking entity. So should we extend the same yardsticks to IL&FS as to a bank? Because Harminder kept referring to the fact that it is systemically important. So what is systemically important?
Well, I think this question was answered during the last financial crisis when the US government and other governments rushed to the rescue of non-bank entities. And we can see that the financial sector is jeopardized not just by the failure of banks, but also by the failure of non-bank entities to whom banks are significantly exposed. And the problem with IL&FS arises because out of the 91,000 crore of debt, something like 57,000 crore of debt is owed to banks. So that is one reason why it has systemic implications. The other reason that it has systemic implications is because financial market exposure is also considerable. And if there is a meltdown in financial markets, that also has implications for other NBFCs which are funding themselves from the financial markets. So for both these reasons, it's going to affect the banks and it's going to affect other NBFCs as well. And therefore, the failure of NBFC certainly has very significant systemic implication.
Meera, TTR spoke about how the US came to the rescue of AIG, which is not a bank. But the fact is, should we do everything that the US does, even if it is not very sensible?
Well, I think, certainly, Mythili, we need to do what makes sense for the Indian market. And I think, as TTR has pointed out, there are multiple linkages between IL&FS and many other financial services players. Of course, the banks, but also pension funds, and of course mutual funds, liquid funds, which are holding IL&FS commercial paper. The question is really how much of all of this is going to be impacted and in what time frame. So I think time is of the essence here, and I believe what the government has done is basically given the markets the reassurance that they are going to take action and not to panic. I think that is certainly a good step to take. Now the question is, how much should they step in, and in what kind of bailout should it be? Is the government, for example, is LIC going to step in and backstop commercial paper, or are they going to try and resolve some of the dues, for example, by NHAI, which are pending? I think there's a multiplicity of options which is currently available to the new management, to the new board of IL&FS, and I would certainly be very interested in seeing how they are going to go about it. But the one point I would like to make, Mythili, is that it's very, very important for the new board and for Uday Kotak to make it clear to the market what is going to be the eventual fate of IL&FS. For example, are they going to continue it in its present avatar as a diversified conglomerate, both building and operating infrastructure, and then in some cases financing it? Or are they going to divest all of these SPVs and get rid of all the infrastructure assets and remain as an infrastructure leasing and financing company, as was its original mandate? Or are they just simply going to dissolve IL&FS? And I think this clarity is something that is very, very important, and we should hear from them in a time-bound manner as to what they are planning to do.
Meera made a number of very relevant points, but would you agree that any action must be predicated on whether ILFS is insolvent or merely illiquid. Because if it is illiquid and all it needs is some temporary liquidity support, that would be quite different from it being insolvent. In which case, the first task before the board would be to get a proper audit of the financial position of each of ILFS subsidiaries and the group as a whole. So we know the correct financial position in order to make a proper assessment. Because if it is insolvent, why not take it to the IBC route? Hemendra?
In my view, I'm very clear that ILFS is not only insolvent today, but it has been insolvent for the last 5 years. And that any basic ordinary financial analyst can tell you that, because of its huge amount of intangibles, which is far more than its reported equity and free reserves. And as per any basic financial analysis, and even as per RBI norms, intangibles have to be knocked off against the equity plus free reserves. Now, if anyone had done this very basic analysis of the consolidated accounts, it would have been very evident that ILFS is an insolvent company and has been an insolvent company for the minimum of the last 5 years. So now the question arises that it is not just merely a question of liquidity and an asset liability mismatch, but the accumulated losses have to be compensated. Because on the asset side, there's a negative net worth of about 23,000 crores as of March 2018, which by now should have increased further. So that liabilities for that also have to be met, because there is no assets on the other side. So that is the minimum capital that is required to at least to bring it up to solvency. And then of course you need additional capital to maintain capital adequacy. So we are looking at a very sizable sum just to be solvent.
Very true, but unfortunately neither the rating agencies nor the Reserve Bank of India seem to have that basic financial skill as you were talking about, Hemendra. But I'm afraid it's time for us to slip into a very short break. Please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and I'm in discussion with 3 financial sector experts, Meera Sanyal, Hemendra Hazari and TT Ramohan, on what is the possible way forward for ILFS. TTR, before the break, Hemendra was talking about how the financial position of ILFS was clearly one of being an insolvent company. And if you look at the last annual report, the current liabilities, that is the payments which are to be made in the near future, were about 2,300 crores more than the current assets. So this is the money that was expected in the near future, which means that the company was clearly not in a position to pay its creditors as and when due. So any blueprint for action must first deal with the immediate problem of finding the money to pay its creditors. The DEO secretary has ruled out fund infusion by any of the government's owned companies or any other owners. But does that rule out a rights issue completely? What if the shareholders don't want to subscribe? What is your suggested plan of action for IL&FS?
Well, first of all, I'm not as persuaded as Mr. Hazari that ILFS is insolvent. I think we have to get the accounting done properly and rigorously and take a view on that. But regardless of whether it's insolvent or not at the moment, the question will remain what is to be done with it. I mean, even if it is not insolvent today, it can become insolvent tomorrow if the problem of liquidity is not addressed. So that is one of the critical issues facing the board and the management, because there are payments which are due in the coming months, and if they continue to default on these payments, the crisis at ILFS is going to be aggravated. So how do you meet the immediate requirements of liquidity? These immediate requirements of liquidity cannot be met by monetizing the assets, because the assets are not readily monetizable. They are monetizable only over a long period of time. So even if it is solvent today, that is, you have enough assets to take care of liabilities, if you get into a situation where the assets have to be quickly liquidated in the next few months, then the firm will be pushed into insolvency even if it is not. So I mean, this is typical of any financial institution, that what starts off with a problem of illiquidity becomes a problem of insolvency. So I think the most important question to be addressed is how do you deal with the payments which are immediately due? So either there has to be an equity infusion, or there has to be liquidity support, or there has to be a combination of the two. Now there is a fundamental issue with either SBI or LIC infusing more equity, because what if the firm is insolvent or is likely to become insolvent? How can both these companies, one of them is a listed entity with non-government investors, the other is responsible for insurance policies, how can they infuse equity when there is a high probability that it will be insolvent? So only government can step in and infuse equity if that is necessary for immediate support. You have to be very clear about that. Bailout has to come from government, and it cannot come from these public sector entities.
Ultimately, TTR, anyway, it comes out of your pocket and mine, whether it is government or these entities. Because, Meera, the fact is that despite the DA Secretary's statement ruling out fund infusion, there's been a lot of talk about how larger shareholders like LIC and SBI should pump in more capital through a rights issue. The unstated fear is that government might compel them to subscribe. Of course, there's no mention of HDFC being asked to subscribe to the rights issue, even though HDFC actually has a higher stake than SBI. So what if the rights issue falls short? What could a plan B be like, Meera?
So, you know, Mythili, I mean, I think everything that has been said so far is correct, but we have to look at this in a different way. And I don't believe, you know, that the assets cannot be monetized. So if we were to just look at the glass as being half full rather than half empty, what does IL&FS actually consist of? We know that they've got over 1,000 megawatts of wind energy, for example. We know that they've got 19 toll roads or possibly more. We know they've got Gift City and probably several similar assets. Now, if you were to take an India perspective and look at India, of course Indian infrastructure is going to grow. Of course, the cash flows from these infrastructure assets hopefully are going to be quite healthy. And what you have done, or what IL&FS has done, wittingly or unwittingly, is that they have set up these projects. So from a project finance perspective, there is no land acquisition risk, there's no environmental risk. If you kind of ring fence the allegations of corruption and gold plating, maybe there is no ethical risk. These projects are now, many of them, up and running with defined cash flows. Now, those cash flows may or may not have been what IL&FS had originally contemplated, and so IL&FS may have to take a haircut on those assets. But for someone who is interested in Indian infrastructure, these are ready-made, well-run, good assets. I'm presuming, I have no idea, but I would imagine that that is the case. And if that is so, if the board were to look at this, I believe Alvarez and Marshall were already working on a resolution plan. I believe that the previous board was already talking with people for monetizing of certain assets. Then I think the new board should take these discussions onto a fast track, look at them, prioritize them, and start selling them. Also, in terms of, you know, repaying the commercial paper, I would say it is better to negotiate a moratorium on the repayment of these papers rather than get an LIC or an SBI to step in, because as TTR has said, that would clearly be very counterproductive.
I take your point, Meera, but if you look at the track record of banks and infrastructure assets, they haven't really had much success. So, Hemendra, what is your suggested plan of action? The DE Secretary says that the IL&FS issue will be substantially resolved in 6 to 9 months. But what does that mean? Also, since many of the problems of the group arose from the fact, as Meera said, that they were all exposed to infrastructure projects and payments from various government authorities were held up, leading to cash flow problems. And getting payments on time is a perennial problem when you're dealing with government. So what is the way forward? In fact, even a rights issue will at best buy time before these SPVs run up against the same issue, lack of reliable cash flows from government authorities. Hemendra?
There is a minimum loss today in IL&FS of 23,000 crores as of March end. So the rights issue has to be minimum to the size of 23,000. So whether the LICs or the shareholders of IL&FS provide that, or it is done by the government, that is what is required. But the amounts that we know of, around 4,500 to 5,000 crores, is being talked about. That to me is clearly insufficient. And therefore, I think it is best that the equity be reduced to zero, because as I said, the intangibles are reported in the balance sheet. They are much more than the reserves and equity. And therefore, the government should step in and, you know, assure the markets that its liabilities will be met. Because today it is the regulator who has classified IL&FS as systemically important, and therefore the onus is on the government, once you have classified it, to bail it out. Because if it fails, even if you start providing large haircuts which have to be done, if no one bails it out, there's going to be a panic in the financial markets. Now you have to see this panic in the light of that today the rupee is under considerable pressure. There's a capital outflow happening in the markets. So, and if a major financial institution like IL&FS goes under, it will set off a Lehman-like environment. Okay. So the situation today, since the defaults of ILF started, is far more significant, because things are going extremely adverse for the Indian economy.
Yes, it is true. Ultimately, the government might have to bail out, but that means that you and I basically bail it out, the taxpayers. And if you look at the entities that are likely to get hurt, if in fact ILFS were to go down under, include shareholders, employees, mutual fund holders, corporate bond holders, holders of CPs, commercial papers, and of course banks, to the extent that they have an exposure to ILFS group. That is, the pain will have to be shared by both the banking sector and capital markets players. Now, should we distinguish between the two? Alternatively, should the government be in the business of bailing out capital market investors, or should we allow the market to administer tough medicine? After all, mutual fund holders are subject to market risk. So why are we getting carried away by the need to bail out retail investors, TTR?
Well, again, I think the problem is not just the retail investors, or and the mutual funds. What happens if there's a financial market meltdown is that other NBFCs will be adversely impacted in terms of their ability to raise funds, and banks are exposed to NBFCs. So we come back to the essence of the problem, which is one way or other the banks are going to be severely impacted, and so that would be the compelling rationale for any bailout. On the face of it, it may look as though you're trying to help mutual funds and retail investors or even NBFCs. But really, the problem ultimately sort of goes back to banks' exposure, and it is because banks are very much at the center of this that the government will have to intervene. Of course, there's another dimension at the moment, which is that if the stock market decline continues, it has obvious implications for foreign portfolio investment outflows and the value of the rupee. So, I mean, that is another systemic consideration which the government will have to take into account.
It does look as if we are caught between the devil and the deep sea, but I'm afraid I have to end this discussion now, because as we've really seen, it's going to be very, very difficult. All eyes will be on the new board as it tries to find a timely and fair resolution of the crisis at ILFS. I do hope the board takes on board, pardon the pun, the suggestions made by our experts on this panel. Thank you so much, Meera, TTR and Hemendra, for joining me in discussion and making very valuable suggestions. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.